Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. First, as a disclaimer, house rules. Please take the time to read important webinar house rules. These are written for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. So these are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. Okay, so let's start with the core retail sales, M over M, for the USA financial data report. And then we have the unemployment rate related to Australian economy. So what is core retail sales, M or M? Let's explain it a little bit. The core retail sales, MO over M means month over month, report measures the monthly change in retail sales in the US, excluding autos, gasoline, building materials, and food services. These components are excluded due to their volatility, allowing the report to serve as a more stable indicator of underlying consumer spending. Since consumer spending drives a significant portion of United States GDP, this report is closely watched. So this report is closely watched. A strong result can imply robust economic activity, potentially promoting a more hawkish monetary policy stance from the Federal Reserve, supporting the US dollar. Conversely, a weaker number can raise the odds of future rate cuts, typically weighted on the US dollar. Now, on April 16, 2025, the core retail sales month over month report numbers are as follows. The previous number was 0.7%, the forecast was 0.4%, and the actual number we got is 0.5%. The actual result of 0.5% came in above expectations. The expectation was 0.4%, or you would say the forecast was 0.4%. So 0.4 is less, and we got an actual number of 0.5%, which came, with above expectations, suggesting that U.S. consumer spending remains solid despite ongoing concerns about slowing growth. Market reaction is we got a bullish leg in euro dollar currency pair. Let me show you the chart of euro USD currency pair. So we go over here. This is the euro dollar currency pair chart. And after the news release, we got a bullish price action overall in euro dollar currency pair. So while the data beat expectations, euro USD moved higher following the release, indicating a weakening US dollar. And this counterintuitive reaction may reflect broader market context. Uh, Federal Reserve rate outlook, that's the number one point. Despite the stronger retail sales number, markets may interpret the result as insufficient to shift the Fed's cautious dovish tone. Recent Federal Reserve commentary has emphasized patience and concerns over slowing inflation. Number two is the risk sentiment and global flows. The uptick in euro-dollar could also reflect improving risk appetite or repositioning after a prior US dollar rally. And traders may be placing more weight on inflation data and upcoming Federal Reserve signals than this single retail report. So what we got is we got a stronger than expected, which is 0.5%, which means US dollar weakens and the euro USD actually rise up. So while the data was stronger, markets appeared to discount its impact, perhaps viewing it as a not strong enough to alter Fed policy expectations. And this reinforced existing bearish sentiment on the US dollar, helping euro USD push higher. So the summary or the conclusion is, although the core retail sales month over month figure for April 16 came in above forecast at 0.5%, that's the actual number. Euro USD rose, suggesting the market is less focused on individual strong data points and more on the broader trend of slowing inflation and dovish Fed signals. It's a reminder that data surprises do not always move markets in textbook fashion, especially when larger macro themes like the interest rate path or global risk sentiment dominates trader psychology. Next report is the unemployment rate related to Australia. So what is the unemployment rate? Australia's unemployment rate measures the percentage of the labor force that is unemployed and actively seeking work. As a key gauge of labor market health, it is influences monetary policy expectations and investor sentiment. A lower unemployment rate typically reflects economic strength and can support the Australian dollar, while a higher rate may signal economic weakness and weigh on the currency. Now, on April 17th, the unemployment data report was 4.1%. The forecast was 4.2%. The previous number was 4.0%. So the unemployment rate came in better than expected. The expectation was 4.2%, so it came somewhere near to 4.1. The previous number was 4.0. So we got a slight change at 4.1% versus a forecast of 4.2%. Although the rate ticked higher from the previous month, it was still below expectations, signaling underlying resilience in Australia's labor market. Now, the market action reaction was, I would say, the Aussie dollar currency pair actually moved higher. Let's take a look at Australian dollar currency pair. So we got actually a bullish leg in Aussie dollar currency pair. That's what I was expecting, and after that, I do expect a drop in price action as well, which we'll discuss it a little bit later. So overall, we got a bullish price action inside AUD USD currency pair. So the resilient labor market in Australia is that the smaller than forecast increase reassured markets that the Australian economy is still maintaining relatively healthy employment levels, reducing pressure on the Reserve Bank of Australia to take a more dovish stance. Now, the rate cut bets were eased as well. For example, a labor market holding up better than expected may prompt the Reserve Bank of Australia to delay any potential rate cuts, which supports the AUD USD. So the positive sentiment towards risk assets is also an important point. For example, the broader market sentiment may also be favoring risk currencies like the Australia, especially if global data or central bank commentary elsewhere suggests easing cycles are already priced in. Now we got an actual number at 4.1%, and the forecast was 4.2%. So I would say unemployment, this is the unemployment rate. So 4.1% is actually better than the 4.2% as far as the Australian economy is concerned. And due to this reason, we got a bullish price action inside AUD USD currency pair. So this means Australian dollar is performing well as compared to the United States dollar. So the report was not a blowout, but better, than expected. So it improved sentiment on the AUD, leading to buying pressure and an upward move inside Australian dollar versus US dollar currency pair. So in summary, we got the report on April 17th, the unemployment report, and it was a mild positive surprise showing Australia's labor market is cooling more slowly than forecast. This supported the Australian dollar with AUD/USD rising as traders trimmed expectations for near-term Reserve Bank of Australia easing. Though not a dramatic beat, the result helped shift market sentiment in favor of the Australia or the AUD, Australian dollar, reinforcing how even marginal surprises in key data can move currency markets, especially when set against a backdrop of cautious central bank policy and shifting global risk appetite. Okay, next, let's talk a little bit about the previous week's global market trends. I'm going to talk about the euro dollar and GBPUSD currency pair. So let's go to a euro dollar currency pair. I was expecting kind of a bullish breakout right over here above 1.1272 level inside euro dollar currency pair. And this is exactly what we got. Overall, price action just, keep trying to print uh, higher swing highs and higher swing lows over here. So the way I see, we got a nice uptrend inside euro dollar currency pair, and price might try to create a short-term pullback over here, and as long as it's not breaking the support area over here, I would say it's just still an uptrend, and it's going to remain like that until market breaks the support level. So for the time being, to me, it's an uptrend going on inside euro USD currency pair. Next, let's take a look at GBP USD. Okay, where's the chart? Here it is. Now, GBP USD currency pair, it was hitting these resistance levels right over here. So far, market is trying to find some sellers over here. As of today, it could still manage to break higher. We will see how it goes. But we have some strong resistance levels up there at 1.3441 area as well. Also, the indicators such as the RSI is becoming overbought. Last time we got a hit at RSI inside the weekly chart at 70 level. That was the top inside GBP/USD currency pair. And over here we got the same situation. So it's quite possible that GBP/USD currency pair is most probably going to print a top over here. Okay, next let's take a look at current week macroeconomic events and data releases. So let's look at the fundamental analysis. So the first one is the German Flash Manufacturing PMI, and this is directly related to European economy, and the most affected currency is the euro dollar. The report will come out on April 23rd at 7:30 a.m. UTC time. The second one is the retail sales month over month GBP, and the date and time is April 25. The time is 6 a.m. UTC time. So let's start with the um, German Flash Manufacturing PMI report. So what is the German Flash Manufacturing PMI? The German Flash Manufacturing uh, PMI stands for Purchasing Managers Index, is a leading economic indicator that provides a timely snapshot of the health of Germany's manufacturing sector. It is derived from a survey of purchasing managers in the manufacturing industry, assessing key areas such as production, new orders, employment, supply delivery times, and inventories. As the largest economy in the Eurozone, Germany's manufacturing performance plays a critical role in reshaping overall Eurozone economic trends. Now, a reading above 50 indicates expansion, while a reading below 50 suggests contraction in the sector. Now, on April 23rd, we will get the actual number, but the previous number was 48.3%. Now, this month's forecast is 47.5, and it is suggesting, that we're not going to get a good number. So markets are basically anticipating a slight decline in the German flash manufacturing PMI to 47.5 from the previous 48.3, reflecting persistent weakness in industrial activity. Continued contraction in this sector may indicate broader economic softness in the Eurozone and could influence ECB, the European Central Bank policy expectations. Now, as far as the market impact on the euro dollar is concerned, if the PMI goes higher than the expectation, which is 47.5%, which means a stronger than forecast reading may ease concerns about eurozone growth and reduce pressure on the European Central Bank to consider further stimulus or rate cuts. Rate cuts mean interest rate cuts. So this could support the euro and push the euro USD higher. Now, euro USD is already moving up. If you check out the chart of euro dollar currency pair, this is the weekly time frame. We got a bullish breakout over here. So if you check out a few days ago, the price action, overall price action just keep printing higher swing highs and higher swing lows. So it's going up. It's a nice uptrend going on. Now I do expect this to be, some turns into some kind of a false breakout over here, by the way. So we will see if market is going to retest, drop a little bit and, retest this area. It might go down a little bit further. Maybe price action tries to test this level, or maybe we have another one down over here. Okay. So this looks quite possible that price action might try to drop a little bit, especially if we get a number below 50 per 50. So if the PMI is lower than expected, which is basically the expectation is 47.5, so a weaker reading would confirm deteriorating manufacturing conditions in Germany. Now, last time we got a number at 48.3, which is still below the 50 number. So this could weigh on the euro and push euro USD lower. So based on the technicals, I expect price action is going to drop. But as far as the fundamental analysis is concerned, with the Eurozone economy showing mixed signals and the ECB maintaining a cautious tone, the April German Flash Manufacturing PMI will be closely watched. A surprise in the data could drive short-term volatility in euro dollar, particularly if it shifts market sentiment on the ECB's monetary outlook. So to summarize it all, until the actual figure is released, Euro USD may trade in a cautious range. However, once the PMI data is announced, a stronger than expected reading could boost the euro, which already looks overbought by the way. And while a weaker number may drag it down, and as trader reassesses eurozone growth prospects. Okay, next one is the retail sales. Retail sales, M over M means month over month. This is related to the UK economy, and the most affected currency pair is the GBPUSD pair. Now, what do I mean by retail sales month over month? Well, it measures the change in the total value of retail goods sold in Great Britain compared to the previous month. It is a key indicator of consumer spending trends, which play a vital role in driving overall economic growth in the UK. As consumer spending accounts for a significant portion of GDP, retail sales data is closely monitored by both policymakers and financial markets. A higher reading typically suggests economic strength, while a low reading may indicate a slowdown in consumer demand. Now, on April 25, retail sales month-over-month report numbers, well, the previous number was 1.0%. The forecast is actually negative 0.4%. The actual data did not release yet, but it is going to be released on April 25th. So markets are expecting a decline of 0.4% in April's retail sales after a strong 1.0% gain in the previous month. The anticipated drop reflects concern over waning consumer confidence, persistent cost of living pressures, and the possibility of softer demand in the spring. So if retail sales are higher than expected, meaning if we get somewhere 1 or maybe 1.5, then it means a stronger reading and would signal resilient consumer activity, potentially supporting the British pound, and GBPUSD is going to rise up more. So this could lead to gains in GBPUSD, especially if it tampers expectations of a dovish Bank of England stance. Now, if the retail sales match the expectations minus 0.4%, that is a result in line with the forecast and may have a limited immediate effect on GBP/USD currency pair. The pair may remain range bound unless accompanied by unexpected commentary or other data releases. So, and let's assume if we get a lower than expected number, a weaker result could raise concerns about a deeper slowdown in UK consumer spending. This could pressure the pound and lead to a decline in GBPUSD as markets factors in potential Bank of England easing. So with inflation trends moderating and the Bank of England signaling cautious policy guidance, the upcoming retail sales data um, would be a crucial gauge of underlying economic momentum. A strong reading could offer short-term support to GBP, while a significant miss may reinforce market expectations for rate cuts. So until the release um, of the report, the GBP/USD may trade in a narrow range, or it may try to move sideways a little bit. So once the actual data comes out and the actual report comes out, A surprise in either direction could trigger sharp moves, particularly if it shifts sentiment on the Bank of England policy outlook. Okay, next let's talk about the euro dollar, British pound, US dollar, Swiss franc, and spot gold. So let's start with euro USD first. So I'm basically expecting a drop in price action of euro dollar currency pair, and let me tell you the reason why. Because market actually managed to break above most of these highs over here, so it's overbought at this point in time. So some kind of a correction or a pullback is probably going to start inside euro dollar currency pair. We might get just a small pullback. Let me delete this one. We might get a small pullback, maybe just to retest this level. So we might get maybe 250 pips drop, and then market tries to rise up from these lows. But overall, the way I see euro USD is most likely going to start the decline pretty soon. Next, we have the British pound GBP USD currency pair. The GBP USD, we got this breakout over here. It just missed this high with the margin of few pips. And if you check out the smaller time frame, let's go to the market watch, go to the GBP USD, and I'm going to apply a template. Okay, so if you take a look at 4-hour time frame, it's still bullish. Still looks like an uptrend. However, market might tries to break this one lower. This looks like a nice bullish trend channel, and a break below this trend channel would, it's probably going to provide us some evidence that pound is going to drop further. Next one is the US dollar Swiss franc. Let's take a look at USDCHF. Okay, we got this USDCHF analysis over here. Let's start with the weekly time frame. Uh, we got the sideways price action overall inside USDCHF currency pair. And then market started the decline. So a breakout over here and another one down over here suggests that market might tries to rise back up and retest these levels. We might get a complete reversal in price action. That's also possible. Or market is just going to retest this level and then drops back down again. So we will see how it goes. As far as the technical analysis is concerned, I expect some sort of a bullish price action inside USD/CHF currency pair. Next, we have the spot gold. Now, spot gold just keep printing higher swing highs. It actually shows us a nice bullish breakout out of this bullish trend channel over here. And if you take a look at a smaller time frame, let's go to XAUUSD, go to a daily time frame, go to the template. So even in daily time frame, as far as the selling is concerned, I would not suggest to look for a sell trade because we don't have any reference of resistance up there. So a good idea is to wait for the price action to show us a pullback. So that might be a good option to join the trend. In other words, if you are looking for a reversal in price action, that might not be a good idea. A good idea is to wait for a pullback, something like this, and then try to join an uptrend. So overall, we have a nice bullish price action going on inside spot gold, and even in a monthly time frame, it's still an uptrend going on. If I zoom out a little bit, I do not have any reference point over here to say, okay, look for a sell trade, because we're getting new highs almost every week over here and every month in spot gold. So a good idea is to wait for a pullback. And once you do get a bearish pullback in price action, then the chances are price action is probably going to provide us a buying spot in spot gold. Okay, that's pretty much it for today. And if you have any questions, feel free to type inside the chat box and I will be happy to answer. Okay, so what you should do next? Well, stay tuned for the next schedule. Stay tuned for the schedule of next week's trading webinar. You can check out our social media pages, and if you want to learn more about trading, you need to visit TradeGeek website. Over there, you can access free trading courses. They are available online for beginners, intermediate, and expert traders. So thank you for hanging around. See you at the next trading webinar on Tuesday, April 29th, 2025. So that's it for the time being from my side. Have a nice day and bye-bye.